Hello.
I don't know.
We are on video number 18, I think, which is freaking crazy. Yeah. In this video, we're gonna probably be going. Well, no, we are. We're gonna be going over order blocks, but again, I want to do a part one and a part two of this series, like we did with the fair value gap. And the fair value gap, we did three. We did part one, part two, and then inverse fair value gaps. I count that as part three. But on order blocks, I just want to go over the definition, what they are, how they're useful to us, and why we need to use them or can use them in the market. But other than that, tomorrow we'll probably make the part two of us going over in the live charts and how to identify them and use them in the chart. But overall, I just want to show you guys how to identify them and know how to, I guess, see them. Let's identify them, I guess. But just be able to see them in the markets and stuff like that. I'm not going to show you guys how to use them with liquidity sweeps and SMTs or whatever the hell you want to say and stuff like that. Again, I just want you guys to learn all the tools first, and then we'll do the strategy creation once we get towards the end of the boot camp of putting all the puzzle pieces together. So what you should be doing is going back testing this stuff. Again, study it for a couple months. Like, again, if you don't know what a fair value gap is, study it for 1 to 2, 3 months until you get it. Go back, look at it in the charts, back test it, then use it in the live demo account or something like that during the live markets and see how price reacts off those areas and stuff like that. So other than that, should I get Venom out? I think I'm gonna get Venom out. We need to get Venom out for this. Yeah, because this is an educational video. It won't be drawn. Fuck it, we got Venom out. We'll keep this on live and see if I get bit. Let's see. Can you guys see? Let's see if I get bit. Hold on. Venom's usually nice. He just shed, so. Hold on. Make sure this log's sturdy. Yeah. Look at Venom, guys. He's nice and purdy now. Let's turn the light up a little bit here. Yup. Venom shed yesterday, so now he's looking nice and bright. Some people probably hate snakes, and they're probably watching this video like, ew, don't watch this guy. He's gross. He's got a pet snake. Yeah, I got a pet snake. I'll wrap him around my neck. Alright, let's get in the video. We got a little buddy with us now. It's getting big. Yeah, Mr. Venom. I'll wrap around my neck. What do you think? He's been in a good mood lately. Don't bite my face. Alright, let's get into order blocks. Let's skip into it. Alright, sorry. I got sidetracked again. So, order blocks. What I want you guys to be able to do is write this down in your notes. I want you to be able to understand what an order block is and why we use them and why they are beneficial to us. And then, like I said, in part two, we'll go over the reasons, how to use them, how to identify them in the live charts, and then we'll move on to the next thing. I don't know. I might not teach breaker blocks because I don't use breaker blocks as much, but that's something I might be able to teach more in the future. I don't know. Let's just focus on order blocks right now. So order blocks, I have the definition right here for you guys. Write this down in your notebook, memorize it, whatever you want to say. Write it down on a note card, take a screenshot of it, whatever you want to do. But order blocks. So an order block is a price range where large institutional orders were filled, leading to a major shift in the market direction, usually marked by the last bullish or bearish candle before a strong move that breaks structure or causes displacement. It's basically where smart money stepped in heavy. I treat it as a high probability zone for entries or targets because if big players move the market from there once, there's a good chance they'll defend that area again, meaning if we could see an order block form, that means a bunch of orders were filled in that area. So what we would want to wait for is price to come back up, retrace back into it, show a reaction off of it. Like, again, if we want price to come down, we see a bearish order block. We want to see price come up into that bearish order block, show selling pressure out of it, we'd scale down to a lower time frame, use our other confluences, and then enter the trade off of that because it's probably going to be a high probability setup since the market makers or the people with the big money and stuff like that, I guess you could say, they filled a bunch of their orders in that area once. When price comes back up, they're going to probably fill more orders again, push price in the direction they want it to go into, and then go from there. So there's the definition, screenshot it, blah, blah, blah. I already drew this stuff out for you guys. Again, I don't want to get too in-depth with it. This is just going to be a little example on what I was talking about just now. But why order blocks are important or beneficial to us. So we use order blocks because they show us where the big money entered the market. And if they moved price from that zone once, there's a good chance that they'll do it again. Again, this isn't 100%. That's why we're going to use this with other confluences. You just don't see an order block and enter right away when price gets into it. Some people might do that. I personally don't do that. I usually scale down to a lower time frame and look for continuation confluences for price to continue in that direction. But trading from these areas helps us stop guessing and start reacting to real levels that matter, no random support and resistance levels. It gives us clear entries, tighter stops, and better trades overall. So again, if we see these reactions, I don't want to say what we're basically going to use it off of. Like if we see liquidity sweep and then a break of structure to the downside with a huge move to the downside, we end up creating an order block instead of like a 5-minute fair value gap. There was literally an example today, but I'm not going to go into that yet. We just want to explain this stuff. But price has a sharp move in the opposite direction after sweeping liquidity. Let's say we form an order block. Let's say we were in an uptrend. We swept the liquidity at this high, let's say. Right? We're just going over an example. We get a huge move down, a break of structure to the downside. We end up forming an order block here, let's say, right? We would want to see price come back up into this area, show selling pressure out of it, go down to our lower time frame or something, which I'll explain in the future, and then show selling pressure out of this area, get our entry somewhere around here. We know where to put our stop above the order block and target our draws on liquidity down below, right? Same thing for the other way. Let's say we were in a bearish trend, we end up sweeping out sell side liquidity. We get a huge move up, we break structure to the upside, we form a bullish order block, right? We want price to go up. We see price come back down. Respect this order block again. Show buying pressure out of it. We see where our entry is going to be. Using our other confluences, we'll go over in strategy creation. Bang. Whoops. Wrong one. How you doing? You get your entry. You know where to put your stop loss, either at this low or the start of the order block or something like that. And then you target your draws on liquidity above. Right? Right, Venom? Pretty simple, right? But other than that, this is honestly probably going to be a pretty quick video. I just wanted to go over the simple stuff of what an order block is and why they're important to us. So again, you have this this definition right here of why the order blocks are important and beneficial to us. And then you guys also have definition to order blocks that I wrote down. Again, this might not be what other people's definitions are. This is how I learned it and it was explained to me. So again, I had this in my notes, went back and got it for you guys and just put it in my own wording. So again, have both of those. Write those down in your notes. Order blocks can be very simple, but again, I don't want to overload you guys with information right away. I'm going to make a part 2 on this. I just wanted to get out there what an order block is, the definition, and the information you guys need to know on why they're important. I just don't want to rush into stuff so you guys go in and try and use it in the live market. But again, in the future, this part 2 is already probably going to be made after this, so you're probably going to skip to the next video and try and identify it anyway. So it is what it is. But other than that, that's pretty much it for this video. I just wanted to go over those 2 things and show you these 2 examples on what we want to be looking for. But tomorrow we're going to go into the live charts, show you guys where you can identify order blocks and be able to use them in your trading when you guys start getting better at reading the markets, I guess. So, what do you think, man? Cool? Bad? Daddy's a bad teacher? Yeah. Talking to a damn snake. That's how you guys know I've gone crazy. But, I don't know. Other than that, easy video, pretty simple. I think it was only like a 8-minute video, so it should be pretty simple for you guys. Write down your notes. It's good to just know what you guys are using. So, overall, now you have it. So, we'll go over part 2 tomorrow, and then I think we only have a couple more videos left. We have to go over, probably, we're going to do 3 parts of strategy creation. I'm going to debate if I want to go over breaker blocks or not. Maybe we could do that in the future and add it on. But other than that, we went over equilibrium, liquidity, S&Ts, We went over fair value gaps. We went over market structure. We went all over that stuff. So we need to do strategy creation, take profits, stop losses, and then we also need to do what else? Time zones, when to trade, macro, when the best time is to trade, stuff like that. And then we're gonna send you guys off, and you'll be able to do whatever you want to do with this information. We'll probably do another psychology video too, which would be good because again, just because you know strategy doesn't mean you're gonna be profitable. All right, I'll be honest with you. But other than that, I'm gonna stop talking. I'll show you Venom one last time. Hey Venom, you're our mascot. Say what up. You're getting big, dude. I can't wait to see where he is like a year from now when he's in our videos. But yeah, other than that, everybody, hopefully you enjoy. Like and subscribe. Again, this is the way I trade. If you don't want to learn it, you don't have to learn it. And if you do want to learn it, it can work. Okay, just you got to put in the work in, just like anything else in life. Put in the work, study this stuff, go back, and you'll see over time you'll be able to use this stuff in the markets and hit high probability trades. All right, like and subscribe. Peace out.